Hi, Chris here. So, I think that it's been pretty obvious, and I think that everyone sees it, that we are now officially in some sort of price channel. So, with this price channel, a lot of people they think, "Oh, I see a channel. I think I'm going to trade it." So, they would say, "Okay, so the top of the channel was right here, and now we're heading to the bottom of the channel, so I think around, like, this is the SPY ETF, they'd say, I think around like 133.40, I think I'm going to start buying. And then, simple as that, I'll resell right at the top here when it hits 139. Right? So easy a caveman can do it. No, not right. If back in my days when I did a lot of pattern trading, I'll be the first one to say that trying to trade in between the bounds of a channel, it was probably one of my least profitable ventures that I have ever done. First because of the commissions, but second off because I was completely wrong nearly every single time. And this works. My logic in this works for both directional channels, so up channels and down channels, especially when we're talking like these kind of short-term things. Okay, so first I want to actually go through how we as human beings recognize channels. Okay, so let's cover this part up completely, and I'll drag it across and we will talk about how we can actually do it. So that is completely opaque and that one's completely black. Okay, so let's say we're going to go step by step how a channel is made. Okay, so we're going to pretend that we don't even see that data. So we just have this bottom stuff right here. It's June 4th, and we say, oh my gosh, I have no idea what's happening in the market. But after like 2 days, you see this happen. We're like, oh, maybe that's a bottom. So what can you do with this bottom? Can you draw a trend line on it or a channel? Not really. It's only one bottom. You can just say it's a bottom. Okay, so you wait, you keep waiting, and then you keep waiting, and then you see eventually you say, oh, looks like we have actually topped out right here on the 20th and the 19th, and we are now going down in the market. So I'm going to say that this is a top. Still, can we do anything with it? Well, not really. You could maybe connect it like it's a top and an upward correction. So there's not really that much we can do with it. Okay, so then we keep going over and we say, oh, there's a bottom. So now I can actually draw a trend line. We say, okay, I drew my trend line right there. And then we wait. We still can't do anything with this top one right here. And then we wait. And then we say, oh, looks like we've had a top right here. Now I can draw my trend line connecting these two tops. So we have what looks like to be somewhat of a channel. And actually I'm going to cut that one through the price just a little bit just so I can make it a little more parallel. Okay, so we have something that looks like that. So it is only, and this is just by nature of the human eye, analyze this for a second and you'll understand my logic in this. Understand that we only recognize that we are actually in a price channel once this top is established. So we really only recognize that we are in a price channel right about here when we think that this top has occurred. So what does that mean? That means that human nature, we say, okay, I can profit when it comes back to this lower channel and I'll buy. You look backwards and you're like, oh my gosh, it was so obvious. Why didn't I sell here, buy here, sell here? Because you didn't know it was a channel and nobody else could have known either. Okay, so my main idea, like, let's talk about why the logic of saying, oh, I'll just buy at the bottom is going to make you consistently, always, almost always, lose money. Okay, so I started trading Elliott Wave, and I've been much more successful at that than pattern trading, and it actually gave me a logic of how channels essentially don't work too well with trading, especially the short-term ones. We can have, if we have a price channel, we have two different scenarios. First, we have a corrective channel, which that one is only going to have 3 waves, and we would say, okay, here's our corrective channel. And then after that second top, so there's our first top, this is the second top, the next movement would be straight down through the channel and making us lose lots of money if we decide to buy right there at the lower bound. So that's the corrective channel. It only has 3 waves, so 1, 2, 3. Now if we are correct on the underlying trend, it will have normally more than 3 waves. It'll have 5, so it'll look something closer like this. And it'll normally be much steeper. When you're with the underlying trend, it normally does not form a channel, but if it does, it will be much steeper. And once again, just drawing our bounds for the channel, and go something like that. And I can't draw it too exact, not too talented with MS Paint. And this is the point where we actually recognize that it is a channel. So after that has topped, so we would recognize it about right here. And then we would buy right here. So here's our profit potential. If we are correct with the trend, our profit potential, assuming that the move will terminate and we will have a downswing as soon as that last correction, that last 5th wave finishes, our profit potential, if we are in the correct direction with the trend, so it would just be from where we bought to where we would sell, so right there. That's our profit potential. Our profit potential right here, well, you're not going to make any money because you bought right here and you immediately start losing money. Okay, so is it really worth it? Both of these say that you're too late. This one says you're going to be wrong right away because it's going to break through. This one says you're not going to be wrong right away, but you basically missed 2/3, if not more, of the overall price trend. So should you pat yourself on the back for that? Not really. Okay, so let's actually take a look at the S&P 500. So this is SPY. 1, 2, 3. So we recognized that it was a channel right here. Okay? After we were sure that this was an intermediate top. So what do? Do we think that it's going to give us one more up thrust up to here? Well, you can do candlestick analysis to tell you what it's going to do. And I want to tell you that this right here is a bearish engulfing pattern. And when this happens, it means that the stock opened higher, but then finished lower. No, it opened higher than the last day's high, and then it closed lower than the last day's low. So it means that all the buying strength, all the demand just evaporated. So that means that we're probably going to wind up breaking through. I think this is going to be a 1, 2, 3, and we are currently in the down section, which I expected to get far below where it is right now. Okay, so that's why you shouldn't trade channels. You can trade channel breakouts, just don't trade in between the bounds. Alright, thanks for watching.